It feels good to be back, ladies and gentlemen, and we're coming at you guys with another jam-packed video. And a couple key things that we're going to talk about in this video is new 13F filings coming in from JP Morgan. JP Morgan is the largest bank in the world by assets under management. They have more assets under management than the market capitalization of Apple, plus about $100 billion, right? They are a very, very large bank. And actually, I think it's more than that. I think JP Morgan now, considering the First Republic takeover, has well over $3 trillion of assets under management. It might be like 3.7 trillion. Very, very big bank. Now, they just made some interesting moves with AMC Stock that are very bullish that I want to talk about with you guys. And they actually, from what I can tell, don't have a bearish position on AMC, which I think is pretty interesting. Now, on top of that, we're going to talk about where AMC is currently at. Like, what do I expect out of AMC? What are the next big important catalysts and dates that I'm watching? And what did we see on Friday that really gives me indication that the picture here is a lot more bullish than some people would like to say? So let's get into all of that information. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video. This next upcoming week is going to be absolutely insane. From the debt ceiling, from earnings, a potential AI start of an AI bust, maybe some margin calls, throw in a collateral crisis in there, and boom, baby, AMC stock could be off to the races. So let's talk about this. First things first, briefly what happened on Friday. We covered this more extensively in the last video. If you guys are not aware of the key points that affected our markets, go ahead and watch that last video. But essentially, it is a stalemate on the debt ceiling. It's like 64 Democrats now want Biden to invoke the 14th Amendment. That would not be a good thing for the stock market. Anything less than just an outright deal being done that does not compromise a lot of government spending is going to likely be a negative thing. Now, we got news on Friday that Republicans walked out of talks because Democrats want to spend more money. So it's not looking very promising as far as the debt ceiling. On top of that, Janet Yellen came out and said there may need to be more bank mergers. And that kind of goes against what we've been hearing, that this banking crisis is over. Well, if you need to see more mergers, what's really going on? Because they have more, Janet Yellen has more information than all of us. Kind of like if the Fed were to come out and cut rates tomorrow, the markets would fall dramatically because why are you cutting rates? Like, what's the problem there? Right? So those two things happen. On top of that, you had Fed Jerome Powell and Ben Bernanke that came out, and it was kind of a little bit of your bullish and dovish Powell. He gave everyone a little something. If you're a bull, you got something. If you're a bear, you got something. But Fed Jerome Powell said one thing in particular that I found interesting. He talked about the market's pricing, and this was in regards to rate hikes and cuts. You're still expecting about 3 rate cuts by the end of this year. Fed Jerome Powell said, hey, sometimes the Fed and the markets don't see eye to eye. And Fed Jerome Powell went on to say that the markets have a perception that inflation will fall faster than what the Fed forecast, and basically went on to say if they are right, then maybe their pricing will be correct. Maybe he didn't come out and say maybe you'll get rate cuts, but he implied that, hey, if the markets are right and inflation does plummet, then maybe they'll be right. But as far as the Fed sees it, it's higher for longer. It's no rate cut. So a little bit of back and forth. That was an interesting one, directly acknowledging market pricing. The Fed does not do that like ever. I really can't recall the last time the Fed went into detail about markets pricing of Fed policy. So those are really the 3 big events that happened on Friday. And I think the debt ceiling was the one that really took the cake. I mean, that was the one that really caused the markets to fall. Now, what'd you notice on Friday? AMC stock well outperformed a lot of stocks, right? I'm not going to say your average stock because the indexes were red, but on an equal weighted basis, AMC did much better than your average stock. And equal weighting means that S&P 500, 500 companies have the same weighting instead of Apple and Microsoft controlling almost 30% of the S&P 500, right? So, equal weighted, AMC performed a lot better than your average stock. Now, AMC was pretty much flat on the day, down 0.79% on Friday, up 0.7% in after hours. So pretty flat. But one thing I find in particular that's interesting, if you look at something like GME that has very similar comparisons to AMC right now, that one would even say has a couple data points that are better than AMC, like days to cover on GME is 17, days to cover on AMC is 5. So in those terms, days to cover is better on GME. Certain things, right? AMC has a higher short interest, has more publicity and more attention. So all in all, I think AMC is a better trade dollar for dollar, but GME fell like a rock on Friday. GME fell 4.30%. AMC was flat, and GME continued to fall 0.05% in after hours. So I do think this kind of shows you a lot on where AMC is currently at. And number one thing that I find pretty interesting is AMC keeps falling on these low volume days because of the option activity. If we look at the option activity for yesterday, you had a lot of those $10 puts that came through that are worth a lot of money, right? You see a $4 million trader here, a $3.62 million trade, a $1.86 million trade, a $500,000 trade, three $500,000 trades, $400,000 trade, right? You get the idea. There's a lot of money flowing into bearish bets on AMC. If you add just the contract size here, that's 3,000 contracts plus 2.67 thousand contracts, call it 5,500 contracts. You add 14,000 contracts onto that. What you're at, call it 19,500, call it 20,000 with all things said and done. You times that by 100, right? You're at 2 million. 2 million shares that had to be shorted by market makers on Friday alone. The volume was 10 million. So I think that is really the thing weighing AMC down right now. I don't think a lot of people are super bearish on AMC. When you look at it in those terms, it's all about the relative volume, and volume has been so flat and low for AMC that those options play a big role into, what's happening on a day-to-day basis with AMC stock. Now, if we go ahead and take a look at the 13F filings, someone is bullish on AMC stock. A new filing from BBMC, JP Morgan, Beta Builders US Mid Cap Equity ETF added a new position of 238,528 shares of AMC in the last quarter. And you can see this new 13F filing as well from JP Morgan Chase & Co. is a call position of 150,000 shares. Brand new position, and JP Morgan added 68% to their core position on AMC, leaving them with 427,000 shares of AMC. Notice here, there is no bearish bet for AMC with JP Morgan. They only have bullish bets on AMC. Maybe they know something, maybe not. Maybe they're just trying to get exposure here, but that's pretty encouraging. We've seen a lot of bullish 13F filings coming out. We've seen hedge funds taking very big positions in AMC. Some of them are super bullish, right? And you see which banks kind of are, leaning very bullish or leaning very bearish. Citi would be a semi-bearish bank on AMC. Bank of America, pretty dang bullish by about 20 times the bullish position compared to the bearish position. So you are seeing interesting filings from companies and banks such as JP Morgan that gives me a little bit more, confidence in the short term here, because what the short term really comes down to, don't kid yourselves. It's going to be the catalyst with AMC. Now, on one hand, I'm a firm believer that we will see first a collateral crisis because stocks that are AI driven will fall, and then you will see margin calls for short positions, for the riskiest positions. Once that collateral dries up, that's when you see those margin calls, or especially if AMC stock can rally as well. The fact that you are holding up, and every time you fall under $5 per share, really that demand zone between $5 and $4.80 per share, you're bouncing instantly at that level. You're not sinking under that level, even though you're seeing millions of shares that have to be short on an everyday basis by market makers. AMC stock still bounces in the demand zone. Now, first you get, like I said, collateral crisis, then you get margin calls in AMC. It's fueled by AI that has really driven all of the rally in 2023 coming down. AI is quite possibly the biggest bubble in history by market cap. AI in particular is interesting because this is not like the devil's lettuce bubble. This is not like the crypto bubble. This is unlike anything you've seen before in terms of this bubble is affecting the largest companies in the world. It's adding hundreds of billions of dollars of market cap, much bigger than anything you have seen, right? Microsoft, Google, both those being multi-trillion-dollar companies. Apple is getting some of the AI effect. Nvidia has gained over $400 trillion of market cap, or of trillion, oh, wow, that would be crazy, $400 billion of market cap since their low alone, right? You talk about Facebook, you talk about Amazon, you talk about these other companies as well. It's a lot of value being created by AI. And I think AI is great. So if you're a big AI bull, I don't mean to sound bearish long-term on AI. Sure, there's a lot of great use practices, much better than crypto, much better than any other bubble we've seen, but not in the short term to run this hard, this fast. In the end, the earnings will matter, right? And that's what we're going to get in this next upcoming week. So if you guys have not watched the last video, definitely go ahead and check that out. But it's going to be a big week for AI stocks, for your stocks that have really rallied a lot. I'll group Zoom in this category, Palo Alto, as well as Nvidia, Snowflake, and Analog Devices. Obviously, some smaller ones in here as well, but those are the big names that stick out to me. So this could be a big week for the markets, big week for AI, including the earnings. You also are going to have debt ceiling negotiations. It's hard to say what's going to happen next. We were hoping to have a deal on the floor to be voted on in Congress by Monday. That's not looking likely. Closer we get to that X date, the more panic you're going to see on Wall Street. And a lot of people even pointed this out, that May 19th, Friday, was a very large option expiration, that we could start to move a lot bigger in the markets after last Friday, right? So this week and next week, in particular, related to the debt ceiling. So, again, I'll go back to this. Collateral crisis, because stocks start to fall, leading to margin calls when AMC can get a rally, or just margin calls in general, right? If shorts have to put up more collateral into their AMC positions, whether it's a margin call or not, that's what they will have to do. I talked about this analogy in the last video. It's like, think about it if you have a variable rate mortgage loan, right? And think about if you had like a bridge loan that's like 100 days or 6 months or a year or whatever, a short-term loan, just call it that. And let's say there's a fire outside and your insurance went up and all of a sudden your loan's a lot riskier. Your interest rate is going to go higher, right? Based off of the risk. Now, imagine if you're pledging something as collateral. Imagine if you're pledging your car as collateral for that, or stocks or something. If your risk goes up and they're like, hey, we need some more collateral, dude. You're getting more risky and risky. You're going to have to give them more. You're going to have to give the bank more because your risk is going up and your asset loss value, presumably, or just it's not worth as much anymore. And you still have this loan outstanding, right? So That's kind of the way that you can look at this. If you have a $10 million short position on AMC and you have $10 million of collateral, if your collateral goes down 30% in value, call it now you have, 7 million of collateral backing that. You got to put up another 3 million of collateral, even though you still have the same amount of shares, call it shares, that was used to originally pledge for that $10 million short position. That's where the problem comes in. And hopefully that analogy is a little bit better to understand. So I think over the, short term, next week or two, next couple of weeks for AMC, obviously, big catalyst is going to be the debt ceiling and this whole collateral margin call situation we've talked about extensively. But on top of that, the special mastery, expect to get an update on that in the next week or two. I think this is really the golden time frame where you can expect to see some bit of news. And then GME earnings. Now, GME is in an interesting position because GME is back up to the level it was at after earnings last time around when the stock went up 35%. Analysts expect GME to post another, negative quarter. They actually made a net profit last quarter of about $48 million, expecting a loss of 12 cents per share this time around. So expectations are not that high. If GME comes out with a surprise profit, it could lift the whole sector higher. And considering AMC, their earnings were better than expected. They are getting back to a more sustainable path. They're losing a lot less money than what investors thought they were going to lose. And they do have different business sectors like the popcorn business and demand for going to see movies, better movies going to theaters. There's a lot of fundamental things that are working in favor of AMC. So I think really, I guess if you want to call it, these next three catalysts will be very big for AMC. And as of right now, the last week or two, I've been looking for a crack in my thesis, right? Don't think I'm just a perma bull because I'm bullish on the stock. No, if there's something I see as a problem, I will call it out. And out of all of those theses and, things that I'm looking at, I firmly believe stocks tend to react before news comes out. For an example, if over the next couple of days we were going to get bad news or something along those lines, the stock would probably be falling a lot more, and especially not holding up at key support levels and demand levels. Sure, the stock has fallen from $6 to $5. Not a big deal. If AMC were to break under $4.80 per share and go out of this bullish uptrend, that's where I would say, hey, maybe we got a bigger problem on our hands. And when AMC outperforms the average stock on Friday, outperforms something like GME by about 5x, that doesn't lead me, to think there's a crack in my thesis, right? And maybe there is. Maybe you guys can let me know down below in the comment section if there's something I'm missing. But AMC stock is working. I mean, even if you look at the 50-day moving average, that's at $5.05 per share. You close at $5.03 per share. The stock went up to $5.07 per share in after hours. So you technically close above the 50-day moving average still. The previous low of this wick on AMC was $4.64 per share. AMC stock closed at $5.07 per share. You're still hitting a higher low. That is still a bullish uptrend. And if I were to imagine on this next uptrend, if you go ahead and draw a trend line here, just call it from the bottom that we've seen right there, just a rough uptrend, that could put you at that 200-day moving average faster than you might think, right? And that is $6.62 per share, almost lining up perfectly with that 200-day moving average. So when I boil these things down, I'm a lot more bullish than I am bearish, especially when you look at the Ortex data as well and you see like, hey, why is AMC actually falling? I think that's important context here. Is it fundamentals deteriorating? Is it, the short thesis going away? Shorts, slowly covering? Like, what's going on? No. Short interest still 25%, 129 million shares sold short. Cost to borrow fees still out of this world. It's the option activity that continues to push AMC stock down, that forces market makers to short millions of shares every single day. Some days, market makers are shorting 40% of the volume in short positions because of the options, guys. So I didn't really want to give a necessary price prediction. But I think over the next couple of weeks, you're going to break out of that 200-day moving average. You could retest some levels that we have not seen since 2022 for sure. The levels that we've seen in 2022, the one of the highest points in August of 2022, around $15, $16 per share. I think that's respectable, especially if we get good news out of the courts and good news from GME earnings. I think that's almost a certainty in my mind. It's not a financial guarantee. It's not a recommendation. Do what you guys want. Sell, buy. I don't care what you guys do. This is not a guarantee. Don't listen to me. But I think if you get good news from the courts, that's a double at least. And I think the options are priced for a lot of money to be made with potentially a very small amount of money being put up. So guys, that is going to do it here in this video. Thank you for watching. It's good to be back, baby. Man, it's like when you love doing something, like I love making these videos, a little time away just don't feel right. You know, like I don't know. I don't really know how to describe it. You just love doing what you do. Maybe it's because nobody else likes to talk in real life, in my life, about markets or stocks or anything. So that maybe this is like my therapy, like my outlet. But it just feels wrong, you know? I'm glad to be back. So that is going to do it here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.